Welcome back. The busiest week of earnings season ramps up with two big tech names after the bell. We're talking Microsoft and Google and Visa in today's earnings exchange. Portfolio Wealth Advisors Lee Munson is our trader today. Lee, welcome. It's good to see you again. Appreciate it. Let's start with Microsoft. Shares are up 37% this year, thanks in part to its big push into AI. Goldman also highlighting Azure's growth and any early indications of Copilot adoption as key numbers to watch. They also finally closed that acquisition of Activision, so that will be something analysts are keeping an ear out for. Lee, what do you do with the stock here?
You know, here's the thing. They've got to come in with at least $55 billion. They've got to beat what the estimates are. They've got to come in hot. I tell you, let's get the hype versus reality. Goldman's right. It's all about Azure. It's all about that 70+% margin on the majority of their revenues and profits. I love Copilot. I'd love to have, subject verb agreement on my Word documents. I care about the whole hype about AI is going to start writing video games. All of this is about, are they going to grow cloud and are they going to keep that 70+% margins? Everything else is just noise.
Yeah, I tend to agree. That kind of sets us up for Alphabet as well, having a hot 2023 up more than 55% this year. RBC is warning of some weakness in ad weakness in search, though, and also says YouTube ads have gotten a boost as people go searching for content during the Hollywood strikes. On the margin impact of job cuts also on their radar. What about this, namely?
I love YouTube. I know those margins are fat. The problem is it's 10, 11% of the revenues. If YouTube was like 25, 30%, I'd be all over this. But you have to believe with Google. And by the way, for full disclosure, I own a little bit. I've owned it for a while. This is all about ad growth. And remember, the ads on Google are core ads. It's not like, Meta or Snapchat where, you get a lot of volatility in spend. So I think that you have a decent ad environment going forward. And I'm not convinced that ChatGPT is going to eat all of core ads. The real thing, if you want this stock to keep going higher, you've got to have cloud become more profitable. It's a third-rate cloud platform. We need to see it make money.
Interesting. So I hear the same emphasis for Microsoft and Google, really all about the cloud for both of them. That brings us to Visa, totally different. Shares are up 12% year to date. Good barometer, obviously, for what's going on with the economy and the consumer. Mizuho says full year consensus revenue expectations are too lofty, especially as inflation moderates. That'll be a nominal hit. The firm also notes ongoing disruption in profitable businesses like travel that could be at risk. And of course, the dollar here, a big story. Cross-border spending was a help in the recent past, but what now? What would you do with this stock, Lee?
I would just stay away from it. Here's the problem. Mizuho's right. I think everything is too rosy. This is all going to be about the macro. Visa can't escape the macro. It's a great company. All it does is print money. People think it can do no wrong, but its growth rate at 10 or 11%, even if it keeps that, we've got to get the personal consumption expenditures to continue to inflate. And if we have any little slowdown or any type of little recession next year, people are going to look at Visa and say, why are we paying such a high multiple? I would rather, this is like one of those classics, like a Starbucks or like Nike a month ago. Buy it if they have bad guidance, buy it when it's down, but why pay a premium for it, especially going into next year?
All right. Parting thought on the markets?
I love the market right now. I would like to see the 10-year trade above 5% longer than 5 minutes. And I think we could see the low come in. If we saw pricing of a hard landing, like at 4,000 on the S&P, I'm backing up the truck and getting crazy.
But here, do you back it up or do you wait?
I would buy here. I'll tell you why. I bought at similar levels earlier in October, but if I hadn't, about 4,200 to 4,250 is a great place to commit more capital. But put half of your extra inventory that you want to buy. I think we can go lower. So yeah, around here I think is a great part if you have a little extra cash and need to get some money moving.
All right, 42.32 is our level at the moment. Lee, thank you. We always appreciate it.
Thank you.
Lee Munson.